These short squeezes are what we need to be, looking for, and there's buying opportunities all over the place even now.
Hey everyone, lead trainer with StocksToTrade, Tim Bohen, back here with the Trader Spotlight, interviewing a lot of traders that, a lot of them I consider my friends and people that I've learned from as well, and hopefully you can learn from them as well. And today we've got Mark Croock. Known Mark, I think, roughly about 10 years now. We actually met at one of the early Tim Sykes conference. We've both been longtime Tim Alert subscribers, longtime Tim Challenge members as well. And much like what I do with teaching trading now, Mark is actually involved in the challenge as well, doing weekly webinars, helping out, teaching others. We're both very similar in that we love giving back to you, and that's our goal for today, is kind of talk about how he got started, what he, the mistakes he's made through the years, how he learned, and kind of where he is today. So welcome back,
Wonderful
Mark.
seeing you again.
Yeah, nice seeing you.
Thanks for having me.
Give a little bit of a background. I mean, I know you were going to school, going into accounting, if I remember right.
That's right.
What kind of led you to trading? Why did you decide, okay, I don't want to be an accountant, I'm looking at day trading these crazy volatile stocks instead?
Yeah, so I had the financial background, and I was interested in stocks, but more from a bigger picture perspective, not really a day trading perspective. Okay. And for better or worse, I never really looked into day trading in the .com.
Yep. I missed it too.
Frame.
I missed it. I was building the business, and I missed the whole move.
Right.
Yeah, yep.
But of course, back then there was not a whole lot of really solid education like we're providing now. But so I got into day trading, found Sykes while I was still working as an accountant, and hated what I was doing. Okay. Trying to find something I was passionate about.
Were you working for somebody, or were you on your own? I can't remember.
Yeah, so I was working at a coffee plant, actually. Okay. That was originally owned by Kraft. Okay. Kraft Foods. But anyways, it was a general accounting position, and so I had a vision of eventually just finding that niche, and I came across a couple of videos that Tim was doing back in 2009-ish. Yep. And one thing led to another, and I was in a good situation, single at the time, and I decided that I would give myself at least 6 months to a year to try it out, and certainly don't recommend quitting a job just on the fly. But
at least two things I pick up right away is, first of all, you mentioned you had at least a little bit of money saved up.
Sure.
And you were single. I mean that's a big delineation. I mean if you don't have at least a buffer and you've got a family or other responsibilities, take it a little slower. But
right.
That's
so
a
safety
different.
Net was there.
Yes. And you could always go back and get a job too, because you had the qualifications, right?
Sure. Yeah. So I had the background, But yeah, so I got into I guess at the time it was just a lot of pump and dumps, and the volatility, was obviously very, very good. We were just coming off the crisis.
I call it back those days. I call that the golden age of short selling these junk stocks. Back in those early days. I mean, it was just there was so many repeatable type setups. It was like every week or every day we had these same type setups back then.
Yeah, so it was certainly a very good timing, and so I got into it, and still took me some time to really master these patterns, and within a couple of years I was more short biased actually. Starting out, and even so until the last couple of years. But I think I'm finally, a lot more comfortable longs. Believe it or not, it took quite a while. The journey was.
I've been working on you for years.
Yeah, I think you finally paid off. So these short squeezes are what we need to be, looking for, and there's buying opportunities all over the place even now, and so that's been kind of where my focus has been. Certainly haven't forgotten about short selling, but
well, and it's like one of those things where I think back when. I think back when we got started roughly the same time, a few months apart probably, and everything's always rotating. I mean, it'll come back, I have no doubt. And I remember back then, 10 years ago, when I got started, people were talking about the death of penny stocks. I mean, here it is, 10, 12 years later, and it's about the furthest thing from the death of penny stocks, because now, we've got these BPTHs or these dries or whatever, these stocks that 10 years ago, we didn't even see these moves. It was back then. It was 1 to 3, not 1 to 30.
Right.
So I think we're a long way from the death of penny stocks. So.
Yeah, I think there's always the next hot sector, low float mania. I think that's kind of been the theme the last couple of years, especially. And we just wait. It's when they as they happen, and we look for those plays and. I think that's what a lot of students have really started to catch on to. So
when we talk about those low float runners or low float mania, can you kind of explain what that is? What there's hundreds, probably thousands of low float stocks, but what makes one the stock? What are you looking for?
Sure. Really the volume. Number one, I really have to see big volume.
Yep.
And ideally, some type of hot sector would be the really ideal situation. Of course, we had marijuana and Bitcoin and other momentum sectors going back, but if it's not a hot sector, it's a stock that's like an RKDA we recently had that. I think was just squeezing on good or so-called good earnings.
Yep. They had some moisture-resistant soybean, and then they had some CBD seed. It was just BS press releases. Yeah,
right.
Yeah. But they were low float. Yep.
But the momentum was there, and most importantly, they held their initial spikes, and that's what I always talk about is focusing on those plays that hold. And prove themselves initially.
Multi-day, you're saying?
Exactly.
Right? Yep,
multi-day runners, got to focus on multi-day runners.
Yep.
And that's one of the biggest things I think students have got to realize, stay away from these one-day failed spikers that run into a brick wall very quickly after the market opens, because
we all have our own terminology, but I call those like the one and done.
Yeah,
everybody,
I call that also.
Okay, all right. Everybody they see this one today and they want to pile in day one. And I'm like, listen, again, as a newer trader, you're probably under the PDT. You can't trade every day. You're limited at what you can do. Focus on those ones that, like RKDA, hell, it's still holding up 3 weeks later, So focus on those stocks that spike, hold, maybe into the end of the week. We all love these Friday squeezers, or into the next week. That's the one you got to focus on when you only got 3-day trades or you're busy. Maybe you got to school or work or whatever. Try, look at those the next day, the ones that hold up those multiple days.
Yeah, and I think you mentioned being limited to 3-day trades. I think that's actually a good thing because they need, new students have to be very, as well as veteran traders have to be very picky, and that should help you refine your selection criteria and focus in on these ones. We don't get them necessarily every day or even every week, but when they do come, those are your account builders. And if you're utilizing your trades efficiently, then you're gonna build up your account very dramatically over time.
Yeah, but I think that's the best point of this is, I know it's hard. I know it's really hard out there. You see that stock with the PR, it's a recent reverse split, it's spiking. But your odds are so much better day 2, day 3, day 4. I know it's hard just to say I'm not going to touch this today, but those we see so many of them that spike and fail, and you can just let it do what it does day 1, come in the next day and look at those, because that is your odds are so much better, because now we use a lot of the same terminology. I call it proving itself as well.
Sure.
When that stock spikes early, hangs around all day, closes the day, near the highs, above VWAP, it's like, okay, we got a recipe for tomorrow or the next day. Now this stock isn't just that one and done that spikes 200 and then closes red on the day or something.
Right, right. And by the way, StocksToTrade, I use it every day.
That's nice.
To find these big percent gainers, and you're doing some fantastic
Awesome.
work over there on that end. And I think, that's the key to really. That's the beginning is sifting through all these big percent gainers, and we see a lot of them in the pre-market.
Yep.
But and StocksToTrade really picks up on all of them.
Cool. Perfect.
But it's just a matter of refining and filtering what's relevant and what is a potential play.
So I'd like to finish up. You talked about the evolution, and I was the same way. I again go back. We followed similar paths. I was 98% a short seller for 6-7 years.
Yeah, wow, I forgot about those days.
yeah, a long time ago. We're old, but how do you recommend how do you recommend someone else? Because everything is always changing. It's sometimes it's high price, sometimes it's low price. I think about it's funny back in the olden days. I mean, today every single day we talk about the float. I remember 6-7 years ago, lots of times we didn't even look at the float. It wasn't so pertinent in your data points, I guess you'd say. So, why do you recommend to that trader that maybe he's been doing something for 6 months or a year and it just isn't working? How do you kind of evolve and change your style, I guess?
Right. I mean, I think you just have to really go through some basic checklists, and goes down to back to what Tim Sykes fundamental teachings, and of course I preach it and you preach it, is really the volume's got to be there. The catalyst, ideally something that's hopefully super fluffy and I say effectively fluffy.
Right. I like that. I might start using that.
But and plays that are likely to have that continuation. So a lot of traders are just focusing on plays that are not meeting all those criteria. And so I think if you just have that checklist in front of you, volume, chart, and catalyst, of course there's a little bit more to that. But I think making sure that we even look at the float. The float is important, and knowing what the supply and demand is. And if you have a huge volume surge on a stock that's only 5 to 10, let's say 5 million float, and you got 10 million already traded in the first hour, well, that's got to be on top watch and certainly focusing on those plays repeatedly and just eliminating the noise. It's too much noise, right? Got to get rid of the
I think, and actually we're at the Trader and Investor Summit, and walking up the stairs, I was just talking to a young girl. She's very enthusiastic, but I mean, she was just all over the place with stuff, and I'm like, the number one thing you got to do is start focus, winnow it down. I mean, look at fewer things, and I think it's a common mistake. I mean, I remember back in the day I had all kinds of indicators. Now I use VWAP. I use one indicator. It's just that is the biggest thing. But that checklist is what I love. Like, I mean, I remember, how long ago did you do pre-flight checklists?
Yeah, that was like, I believe 3 years ago.
Yep. So that was actually, I remember that webinar, and I actually stole quite a bit from it, and I've got my, I'd always kind of had a mental checklist, but after I watched that, I actually made physical checklists, actually made notebooks out of them, and I think that's something I talk with new traders a lot, is your criteria can be wrong, but have some criteria,
Right.
and start, and that checklist will probably change over time, but start out with some sort of criteria, and if you can't check 7 out of 10 boxes or 8 out of 10 boxes, you shouldn't be making that trade. So.
Yeah, I made this analogy the other day with another student that if you're a business owner and you're looking to hire somebody, you're getting all these resumes across your desk, you should be able to quickly filter out the ones that are not just not up to par, up to speed with what you're looking for, and it's no different to these stocks that create a lot of noise sometimes because we see this big percent gainer showing up on scan, but you start to do a little bit of legwork, and this is just not the play that meets the criteria we need. So.
Right. So we'll finish on this question. So that's a very common question people say is, how do I get down to a small list of stocks? Would it? And I know it's hard to answer, and because I get asked this a lot, so that's why I'm throwing it on you.
Sure.
But okay, I'm a new trader. How do I get down to that one or two stocks that I'm going to trade today?
Sure. Yeah, I guess it goes back to these basic criteria, and I think if the volume's there and the volatility, and it's a former runner,
yep.
right? So you don't have a lot of former runners spiking with volume every single day,
right?
And those are the criteria you need. So find those, if they are there, and or maybe they're there from your prior day's watch list,
sure,
or even from several days or weeks back that should still stay on your watch list if they're holding trend, and wait for volume to come back in and kind of eyeball it on your watch list. And I think that in conjunction with your new big percent gainers that show up every morning, that should get you focusing on a select few every day, and a lot of times there's nothing there, so
right.
you shouldn't.
That's a great
you shouldn't
point too.
Think like you shouldn't think.
And that's actually a common mistake traders make, newer traders, because and it's a legitimate mistake, but they think there's always going to be something, and some days there just isn't. Some weeks there isn't.
Right, and I think that there's a lot of services out there, and maybe a lot of hype or whatever marketing that leads you to believe you need to be trading every single day.
Yeah, Twitter's it's funny, the evolution of the last 10. I used to tell everybody you have to use Twitter, and now I'm just like new traders. I'm telling people to avoid it because it's become this 500 picks a day, and
my gosh!
And people just think, well, that's the path to success.
Ticker spamming, yeah,
exactly.
Yep. It's a challenge to get through all the noise, but
yep.
I think that's what you and I have really
Yep.
helped bring a lot of students through the woodworks,
yep.
and we see their profit charts coming through, and lots of new successful traders. So got to just keep at it.
Yep. Well, and that's it. That's the biggest thing. I mentioned, again, we're at the Trader Investor Summit here recording, and I think this is the 11th or 12th or something like that. And Mark and I met at the 2nd. So we were putting in that time back then, and we're still here 12 years later, showing up every day, doing basically the same thing. That's the non-glamorous thing about this stuff is. A lot of it's just repetition and refining,
Right, and keeping the emotions. That's the other big thing is we're all human. We're all going to have mistakes and emotions, and limiting all of that is certainly becomes easier over the years. But yeah, can't have too many highs or highs or lows. Just really let price action dictate and let the chips fall where they may.
Cool. Well, thanks a lot, Mark. Nice seeing you.
Wonderful seeing you. Thanks, Tim.
Thanks a lot. Thanks for watching our video. Be sure to comment below with any trading-related question. We love answering your questions. Also, like and share with your friends, and be sure to subscribe to be notified as soon as our next video hits. And if you're looking to expand your trading knowledge, don't forget to check out all of our other videos. And be sure to click the trial below. Check out StocksToTrade. I think it is one of the best, most rapidly advancing softwares out there. Be sure to check out our trial.